Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 19th of December. Starting with the FTSE 100, which is grappling with that February resistance line there. Currently around 76.30, above that on an end-of-day close basis. We're looking for our best-case scenario target for the end of this month, to 7800, maybe 7810. On the downside, hoping that there will not be any end-of-day close back below the 200-day moving average there. 75.60, otherwise that could lead back to the 50-day line at 74.80. But at the moment, expecting Christmas cheer to prevail and that uptrend line of the RSI window to also dominate the proceedings. Moving on to the DAX, which is starting to improve now, ahead of an imminent golden cross between the 50 and 200-day moving averages. This hopefully will be a mid-move consolidation, as in the case of a potential bull flag. We were hoping that any losses would be limited to the old July peak around 16,500, and so far that's been the case. End-of-day close above that May resistance line projection at 16,900 could take us up to a best-case scenario target for next month at 17,900. Which is a resistance line projection from back in January this year. The Dow is in a good place as well, and here you can see that's even going for our maximum, inverted commas, target there at 37,800. We've got support coming in so far, 37,000, so above 37,000 we should relatively easily hit that 37,800 level. Otherwise, maybe a more serious retracement back to 36,600. Resistance on the way up this month may be in order. On to Bitcoin, which looked as though it might be getting a bit tired, but it's perked up. Here we've got this rising trend channel from back in October, the floor of the channel at basically the 41,000 area, although we overshot a little bit yesterday. It was a key reversal to the upside, which is normally a good signal. Bit of congestion there in the low 43,000s, but above that, we can clear that area. Then it should be up to as high as 50,000 by the end of next month, and hopefully a bit sooner than that. Below 40,000 risks a test of the 50-day moving average at 38,700, but we may just get away with it, especially after the rebound for the RSI indicator above neutral 50. Worth looking at crude oil at the moment, given the issues in the Red Sea, and they seem to have ensured that this market has improved, but not that much, actually, probably not as much as we were looking for, in the sense that maybe one would expected maybe a better jump towards the post-November resistance near to $80. But at least we have perked up, and while we're above, or at least on the right side of $70.50 recent support, then the $80 area could be possible as a best case scenario, but interesting that we haven't even been able to sustain the $74 area. Moving on to the stocks, and starting off with Argo blockchain, and here the benefit of the reflected glory of Bitcoin is obviously helping, but a V-shaped bull flag breakout, and above that initial December peak of 14 and a quarter, looking for 20 pence as soon as the end of next month, and who knows the way things are going, that could be by the end of this month, especially given the way that the 50 and 200-day moving averages are both rising into a potential golden cross, which should happen over the next week or so, maybe around the Christmas day time. Obviously, we'll be closed at that time, but over the next week or so. Moving on to Audio Boom, which has managed to live up to recent good expectations, managed to break through the 200-day line at the first time of asking, and have stayed above it, which is relatively rare. You only see that normally in very strong situations, so that's an indicator of sorts. £2.80 was the original target there from that June resistance line projection, and above that we're looking for up to £3.85 at the upper parallel of that broadening triangle from back in June. This stage only well below the 200-day line, now near to 250, would really delay the upside scenario. Brighton Pier has been a good feature, and here we've had a V-shaped bull flag breakout. We've also broken through the 200-day moving average at 49 pence after taking out our initial target there at 48 pence, above 48 pence, looking for up to 66 pence by the end of next month by way of filling the gap down from back in July at 57 pence. The stock gapping up is always, or normally, very significant, and in the case of Conroy, we've had two gaps higher in the recent past. In fact, both unfilled. We've got the 50 and 200-day lines both rising, and an end-of-day close above the 200-day line now at 23 pence should be enough to give us 30 pence by the end of next month within that broadening triangle from June. Good to see ECR Minerals benefit from the interview yesterday with Mike Whitlow. And here you can see that we're heading very quickly towards our 0.3 pence initial target there, which hopefully will be hit by the end of this month, and looking for 0.42 pence by the end of next month, the upper parallel of that rising trend channel from September. This stage, only well below 0.24, the base resistance there for the shares really delaying the upside scenario, but you can see the very strong candles that we've had over the past few sessions, and that is backing the idea of recovery, as is the rising 50-day moving average. Stock which I wasn't really intending to look at, but had a look at anyway the other day, was Eden Research, and it's good to see that the shares have delivered a second gap to the upside and also taken out our initial target there, 5.6 pence. Above that, we can upgrade to the line I'm just about to draw now, which is heading for 7.5 pence, and ideally we see that by the end of next month or even sooner than that. The best case would be that we stay above the 50-day moving average at 5.3 pence, but one may have to allow for a little bit more slack for this situation. Onto Eurasia, which continues to deliver a pie in the face to the bears. Here we're just about clinging on to the 50-day moving average after closing that gap down from the beginning of the month. That gap closed buy signal working well and turning into new support at 2 pence. Above 2 pence, we're looking for 3.5 pence on this situation, even if we fail after that. And one would expect that the minimum here will be that resistance line from April at 3 pence, something which is clearly defying the fundamental picture at the moment. Moving on to a requested stock, which is Kodal, and here we've already said that's, or suggested rather, that the floor is in with that support line there from back in June. That's heading for 0.35, and above 0.35 we're looking for a recovery back up to the 50-day moving average at 0.5, hopefully over the next 2 to 3 weeks. But if you're cautious, you might want to wait for an end-of-day close through 0.41 pence, as that seems to be blocking progress just initially on this situation. Moving on to a stock which I think I may have covered recently, but not that recently, and the shares have done rather well. Here you can see that Naked Wines has hit the first target there, the top of that triangle from back in October. That was around 48 pence. Above that, looking for up to 59 pence over the next 2 to 3 weeks, maybe a bit sooner, but we need to stay above that old resistance line target at 48 pence to get us a target near to 60 pence. Onto a stock which I looked at on the previous rally, but because it's a FTSE 100 stock, don't normally look at these, but just an interesting scenario here with Ocado. On the previous rally from June, there was a bear trap gap reversal, and the shares rallied from around £4 to £10. On this occasion, we had a very similar, in fact, perhaps even better signal there with the bear trap island reversal. So we gapped down back in October and then gapped up in November, sort of giving you a notional entry point towards the low 500s, and never actually went back below that after that. And so that signal certainly worked there, especially with the bullish divergence at the time. Current situation is we've gapped through that resistance line there from back in September, and we're looking for a best case scenario target here up to £9 at the old September peak, maybe by the end of next month. The sizzle here, maybe from the technical point, is that the recent swing low there at around £6.99 should be a pretty reliable stop loss. So the final point to note is that we've got a potential golden cross there, so we're about a week or so away from a golden cross between the 50 and 200-day lines, which should provide extra momentum and is normally the strongest part of the cycle as it is now. Petrel is next, and here one of those stocks that kept on rising and rising. Here we have various targets on the way up, but one of the last targets up there at 3.1 pence is currently resistance, as often happens. Above 3.1, looking for 4 pence by the end of next month as a best case scenario target. I suggested that Power Metal could hit 0.9 pence by the end of the month, and in fact it's arrived a little bit early, which is always a good thing, which leaves us looking for a new potential target here. And that would be up to the line I'm just about to draw now, so 1.3 pence potentially by the end of next month, the longer we stay above 0.9. At this stage, only back below 0.8, really delaying the upside scenario, and hopefully we won't go even down below 0.85. Very difficult charting contender next, which I think I looked at yesterday, is RC365. Here we've got the shares breaking out of that falling wedge from back in October. That was versus the 9.5 pence level, and the target initially up to 16 pence, which hopefully we'll get to by the end of this month. Interesting that the 50-day line also seems to be curling up at the moment, or at least it's gone flat, so that is a pretty good positive for the stock. Finishing on with tertiary minerals, where I'm hoping and have been hoping for the big spike towards the 0.3 pence level. Maybe today's news will do the trick, but at least initially we're looking for the top of that broadening triangle from December, 0.23, and that's valid the longer we stay above 0.15, which is basically the early autumn resistance for the shares. That's it from me today. More updates tomorrow.